Hello, my name is Steve Bigelow with the Candlestick Forum. We've been advising ever since the market got a little bit iffy up here and started moving sideways to stay long as the indexes stay above the T line, but always have your safety stops in. Very simple logic to that. If the strength of a bull move can be observed, that means any negative news probably isn't going to have as much influence to the downside. If you're in a downtrend, any positive news is not going to have that much influence to the upside. But if you're moving kind of iffy and sideways, any positive news, any positive tweet, or any negative news or negative tweet is going to change the investor sentiment very quickly because there is no conviction one way or the other. So as we saw, even though we were in an uptrend, we kept advising, stay long, but have your safety stops in place. The same scenario over here on the NASDAQ. Ever since it gapped up, started trading off, staying above the T line, but not very convincingly, we had to assume that we were in an uptrend as long as it stayed above the T line, but you wanted to keep your safety stops in. Right now, this would kind of imply that we're heading back to the 50-day moving average or putting us back into kind of a wedge formation. However, there are candlestick patterns still working, and the benefits of that is we can see how patterns that we're setting up. We illustrated this chart on Thursday that it was a J-hook pattern. Today, with the market down 400 points, it was still trading positive. Same scenario on ENPH. After the classic pattern, creating a J-hook pattern, the classic being the fry pan bottom, followed by a J-hook pattern, the implication was that we were heading higher. So even when the market was down 400 points, this stock was still trading in the pattern that we expected it to. This is very simple reasoning. The investor sentiment is building up to create these patterns, and they're much less affected by the overall market trend. So the J-hook pattern has been working. Our recommendation on Lake. Look at how it bounced off the T-line, doji, still heading up. And today, APT bounced up through the resistance level in this trend channel, but most importantly, because it experienced a best friend signal, a doji followed by a gap up. What was even more convincing was it was a doji followed by a gap up through the T-line, through the 50, and breaking this downtrend. Where's the next likely target? Back up to the top of the channel. And fry pan bottoms continue to work. Our recommendation on Chewy a couple weeks ago was based upon this fry pan bottom buildup. Today, it was still trading positive even in this market. So the logic of candlestick analysis is that investor sentiment is what moves the prices. They're not as much, candlestick patterns are not as much affected by the overall market trend. It's based upon each individual chart pattern. So right now, we got to assume that we're heading down lower, at least probably back to the 50 before they can bounce it back up. But as you can see, the nature of the market right here is very indecisive. That'll be it. We'll see you in the chat rooms.